Most people are going to lose money in the next recession, and the crazy part, they won't even realize it until it's too late. They'll panic, they'll sell the wrong assets, and they'll walk away with less than they started with. But a small group of investors, the ones who understand what I'm about to show you, will do the exact opposite. They won't just survive the downturn, they'll come out of it even wealthier. Today, I'm going to show you 7 investments the wealthy almost never sell during a recession, and why holding on to these assets is what separates long-term winners from everyone else. Let's start with the first one. High-quality stocks, not hype stocks, not speculation. Real businesses with strong cash flow, dominant market positions, and a history of surviving downturns. Think of companies that people keep using no matter what the economy is doing. During a recession, these stocks might drop in price, but the underlying business doesn't disappear. The wealthy understand this. They don't panic. They hold and often buy more while everyone else is selling. Second, index funds, broad market funds that track entire economies. These are the backbone of long-term wealth. When the market crashes, index funds go down too, but history shows they recover. And not just recover, they reach new highs. The wealthy don't try to time the market. They stay invested because they know missing just a few key recovery days can destroy long-term returns. Third, real estate. Property values can dip during a recession, but real estate generates something powerful: cash flow. Rent doesn't suddenly go to zero just because the market is down. In fact, in many cases, rental demand increases. Wealthy investors hold on to good properties because they produce income while the asset itself appreciates over time. Fourth, dividend-paying stocks. These are companies that pay you consistently just for holding their shares. During a downturn, prices may fall, but many of these companies continue paying dividends. That means you're still getting paid while you wait for the recovery. The wealthy love this because it turns volatility into income. Fifth, bonds, specifically high-quality ones. Now, bonds aren't exciting. They won't make you rich overnight, but during recessions, they provide stability. When stocks are crashing, bonds often hold their value or even rise. Wealthy investors don't sell these. They rely on them to balance their portfolio and reduce risk. Sixth, cash, but not in the way you think. The wealthy don't hold cash out of fear. They hold it as a weapon. During a recession, cash gives you options. It allows you to buy assets at a discount when everyone else is forced to sell. So while others are liquidating investments to survive, the wealthy are using cash to take advantage of the opportunity. And finally, number 7, ownership assets. This could be a business, equity in a company, or even content platforms like YouTube channels. These are assets that generate income regardless of market conditions. The wealthy don't sell these because they are the source of their cash flow and long-term growth. Now here's the key idea that ties all of this together. The wealthy don't focus on price, they focus on value. Prices go up and down, that's normal. But if the underlying asset is strong, selling during a recession is often the worst move you can make, because recessions don't destroy wealth, emotional decisions do. Every market crash in history has eventually recovered. The people who win are the ones who stay in the game, the ones who hold the right assets, the ones who are prepared before the downturn even begins. So if you take anything from this, let it be this: don't build a portfolio you can't hold during a crash, because the real test of investing isn't what you do when things are going up, it's what you do when everything is falling. The wealthy already know this, now you do too.